JP Morgan argues that last week's sharp rally sell-off, sharp gold rally and then sell-off reflects a momentum reset after an extreme rally rather than a break in the underlying trend. The bank raised its year-end 2026 gold price target to 6,300, citing persistent central bank accumulation, inelastic demand tied to fixed tonnage goals, and continued investor diversification into real assets. Silver, for them, by contrast, faces higher volatility and greater downside risk due to weaker structural support and emerging industrial substitution pressures.
Welcome to the Morning Markets and Metals with Vince Lanci, where each morning Vince brings you the financial and precious metals news to get you ready for your day. And now, here's Vince.
Good morning, everyone. I'm Vince Lanci. This is the Goldfix Market Rundown. JP Morgan says gold's violent sell-off was a reset. They put this out 2 days ago, not a reversal. And with central banks still buying on tonnage targets and investors underallocated, they are. The bank sees a path towards 6,300 gold by year-end 2026, firmly intact, with upside targets of 8,000 to 8,400 before you consider it being overbought. I think that's pretty significant and underreported in the press. That's the story we covered yesterday, and we're going to give you a little bit of a teaser on that today. We're also going to be putting out later on today the SHFE commentary that Eric and I have put together, China price changes and their implications. And we also have some analysis about retail's euphoria and our pushback on that, which should be going out as well later today. There's the home page. Here's the markets. 10-year yields are unchanged bid at 427. The dollar is 97.40, up 10. The S&P 500 is 69.32, a bounce, up 10. The NASDAQ and NEMIC are 25.331, up 8. Tech stocks have been getting slammed with an emphasis on the AI. It almost seems like AI is starting to trip over itself. You see the Bitcoin sell-off is, I think, part of that. AI is going to make everyone unemployed. It's like basically a narrative has come back, and it may be valid, but know that that's what's going on right now. There's empty space for AI, and people are seeing all this spending, and AI is kind of taking it on the chin. Within the tech sector, there's like a split going on right now. Okay, gold. Another good night in gold. Gold is up $104 at 50.51, above 5,000 again. Silver, 90.12, up $5, above $90. Shanghai spread has gone from $5 over to $10 over in a rallying market after a turnaround. That is a buy. That is a sign that not only is the Shanghai demand there, but it's pulling us higher again. I want to go back to an analogy that I've used. Many of us understand the concept of the anchor as value and price of the boat. Price is the boat. Well, if you flip that, you're going to get the Shanghai-New York relationship. Shanghai is the anchor, or let's put it this way. Shanghai is where the bungee jumper is tethered, and that is value. And on the way down, if the tether is good, if the anchor is good, New York will drop more, and then New York will snap up, and the spread will tighten, and then Shanghai will resume its rally, bringing COMEX with it. And that's what you're seeing right now. Now, if this breaks, if this relationship changes, if, for example, what do I worry about? What do I worry about? If the market were to drop and this were to drop with it, well, that's the anchor collapsing. You don't want that. That's like an anchor in the ocean moving. You don't want that. You want the bungee jumper to be firmly anchored to Shanghai demand. So that's the way to read the spread if you're looking at these day-to-day machinations the way we do. Silver 89.60 on futures. WTI down 45, natural gas down 10, palladium up 86, and platinum up 84. Gold, silver is down 2. Firmly is a dangerous word to use, but let's just say it's below. It seems to be stabilizing at a lower level, gold, silver is. You follow? And grains are mixed, mostly weaker. I want to move to the JP Morgan report, which had been covered circuitously by the mainstream media and covered properly by Zero Hedge. And we want to put our own spin on it. JP Morgan argues that last week's sharp rally sell-off, sharp gold rally and then sell-off reflects a momentum reset after an extreme rally. I would note they use the word momentum. Just pay attention to that if you're a Michael Oliver person. After an extreme rally, rather than a break in the underlying trend. The bank raised its year-end 2026 gold price target to 6,300, citing persistent central bank accumulation, inelastic demand tied to fixed tonnage goals, and continued investor diversification into real assets. Silver, for them, by contrast, faces higher volatility and greater downside risk due to weaker structural support and emerging industrial substitution pressures. Now, these aren't empty words, okay? The inelastic demand in gold, we talked about that for about a year now. And it's really important to understand this because you all suspect they're doing it, and I'm telling you they're doing it. And JP Morgan is, in their professional way, agreeing, and that is this. It's one thing for a central bank to buy gold with other fiat. Oh, I have euros, I'm going to sell some euros to buy some gold with it. I have dollars, I'm going to sell some dollars to buy some gold with it. They're not doing that. The central banks are maintaining their fiat portfolio and buying gold. Where are they getting the fucking money to buy the gold? They're printing money to buy gold. Now you say, well, what's your proof of that? My proof of that is in 2024, we started noting that every quarter, India would buy the same amount of gold every quarter, no matter the price. $1,000, $2,000, $3,000, $4,000. They weren't buying price. They weren't budgeting for money. I can only spend $50 this week on my coffees. No. They were budgeting for gold. I need to buy 50 ounces today. And so, however much it costs, we buy it. They're price insensitive. They're dollar inelastic. They're tons elastic. They're elastic. They're buying ounces with dollars. They're spending dollars. Very quietly, they're revaluing their whole portfolio. They're increasing their M2 supply, as we've all seen, and that money's, fuck it. I'm just going to go right to the report. Here. I'm going to show you here. I mean, this is, seriously, a violent week, a stable thesis. This is our write-up. This is not their report. Our write-up of their report. The pricing engine, tons inelastic supply and time compression. That's our fancy speak for they're buying tons, not spending dollars, okay? They need to buy, their demand is inelastic, which means they want it at any price, and the supply is inelastic. You can't just pump gold like you can pump oil. And time compression, they seem to be running out of time. That's our assessment of this. Here, look, I'll show you a little bit more. Here's the key points. JP Morgan argues the recent gold sell-off reflects a momentum reset. Okay, we did that already. All right. Central banks remain the anchor of the rally with demand increasingly driven by fixed tonnage targets rather than price sensitivity. Okay, that's their way of saying they're printing money to buy gold, reinforcing inelastic buying even at higher prices. Investor allocation to gold has expanded meaningfully, but remains below historical saturation levels, leaving room for further diversification towards real assets. Now, the reason I'm so adamant about this now is because I've been saying this for Goldfix has been saying this for almost 2 years, and it's easiest to see it. Josh Fair was saying it as well. But for a bullion bank to say this isn't hype to make you hold a bag. I don't think so. If it is, I'll be holding a big bag, Now, I want to shift to silver for a second. Silver faces greater volatility and downside risk due to the absence of central bank support and rising industrial substitution, while gold remains the primary structural beneficiary. Okay, silver's more volatile. That's what they're saying, okay? And they're saying silver will remain more volatile because central banks don't buy it. And guess what? Sovereign funds are buying it. And the proof is, if you were to look at the platinum, silver, and gold charts, they're all doing the same thing now. Someone is out there indexing all metals and buying them, whether it's a country, whether it's a sovereign wealth fund, whether it's an institutional investor. I don't care. All metals are trading like a basket now. You have a basket for energy, right? You've got you've got baskets for energy that you use for indexing. Well, you're going to have baskets for metals that you use for indexing. What's the price of gold? Well, it's the New York price is here, the Shanghai price is there, and 80% of the volume is coming from Shanghai. So the price is 80% of Shanghai and 20% of New York. You're going to have an indexing created for metals that's going to be a blend of global prices because you do it in energy, you do it in oil. Read the report. Read our breakdown report. It's a really good breakdown of a really good report. And I can't believe I'm saying that about JP Morgan, but there you have it. I mean, they're giving us the play. Okay. News and analysis update on mining portfolio stocks that sent out this morning. China sets the silver price, as we just alluded to. Trump announced Project Vault. I mean, look, the whole thing, the whole world is minerals and metals now. And rare earths, watch. Rare earths, we're going to make them. We're going to find them and we're going to get them. And once we get them, it'll be China going, oh shit, how are we going to get our silver now? Anyway, the chat's gotten really, I think, slow. So we're going to relaunch the whole process again and probably clean up a couple links. I'd like to use a different platform, guys. I know Discord's better for this sort of thing. Even WhatsApp's better, but I can't get 70 and 80-year-olds to go on Discord when we're already using this. I mean, I can, but it's all in one place right now, and it's harder for me to go back and forth along platforms. So I'm going to clean it up, and as it gets better, I'll make your experience better. Today is Wednesday, ADP employment, which is a precursor to employment. And those are the hats, MAGA and MAUGA, and the chick hats that Charlie came up with, which I like. You should buy them for your sweetheart, whoever that may be. All right, I have oil up. Why do I have oil up? Because oil is let me change this perspective on this. Oil. Depending on where you trend to draw the line, you could say oil doesn't have a breakout yet. Let me hide Paul here. Depending on where if you draw like a monthly might look more like a breakout. See, a monthly is clear. If you draw a line from here down, you're broken out. I don't buy into that. I draw a line from here to here. Now you could draw a line from the wicks because they look nice, but nice is not what we're looking at here. What I'm looking at is here. I'll just draw what I'm thinking if that helps you any. No, it's not a straight line. There you go. I think that's straight. No, it's not straight. Oh, there we go. All right. So if you want to do the wedge thing, I draw body to body on candles. If you look at it that way, depending on where you draw it, we did or did not break through. Okay? So here, I'm going to draw it that we did not break through. Here's why. Because I'm going to draw another line here, which is basically the weekly that says we did break through. So you should be long oil, adding to a position if it gets above my first line, and you should be long oil as long as we stay on the trend reversing this line. So this is kind of like an oil. This is a multi-weekly oil fishhook. Let's go to a daily. This is interesting. Maybe it's time to sell a little gold and buy some oil. Perish the thought, but you get my point. I want to make this a weekly, I think. Yeah, on a weekly, you can see it, right? On a weekly, you're like, I don't care about that long. I care about this. So there's my final boss of breakouts. Let's call this the initial boss. As long as we're above 60, you're comfortable. And that's a really damn good risk reward for oil right now. $3.50 seems like a lot, but this line that I drew, this random line, we're not going to go to 124, at least not right away. Let's get to 92. Let's get to 76. How's this? We get through 68, we go to 76. You may say, well, that's not much. Well, then that's fine. It may not be enough for you, but I'd rather have a 90% chance of what I just said than a 10% chance of going to 124. That's how I'm looking at it. All right. I'm Vince. Have a great day. Thank you.
Well, thank you, Vince, for this morning's broadcast, and thank you at home for watching. Hope you enjoyed the show and found it helpful as we navigate the latest twists and turns in the gold and silver markets. And before we wrap up today, did just want to thank Dolly Varden Silver, who was the proud sponsor of this morning's show. And they did just have their latest set of drill results out as they continue to not only acquire properties, but aggressively drill in the midst of the rally. And to find out a little bit more about the results, well, here's Sean Kunkin, the CEO of Dolly Varden.
We've hit some really, really high grade. We've got this area in northwest British Columbia. So right on the Alaska, British Columbia border in Canada, we've got the rich past producing Dolly Varden and Torbert mines. And then we've built up a very large land position, 100,000 hectares of ground, 5 past producing silver mines. We were buying silver when it was $16, $20 an ounce. And we were aggressively doing so until April of this year. And what today's announcement highlights is we invested over $20 million in exploration activities throughout the summer. And the results of the summer program are still continuing to be announced. So, Chris, we've taken those past producing mines and we've stepped out. And what we're finding is that the old timers in 1959 that stopped producing silver because it was 85 cents an ounce. 85 cents an ounce in 1959. There was no incentive. We followed up on the good work they were doing when they were out there producing 466 grams per ton. And what did we find today? Well, we found 467 grams over 15 meters. So it was a big strike. It's really good numbers. There's a number of really, really, really high intercepts in there, including 1,300 grams of silver over 2 meters. So there's a high grade core, but it's continuous over a very, very mineable width.
Well, thank you, Sean, and thank you for watching at home and being here with us today. Sure hope you found that helpful. And to hear a little bit more about the latest from Dolly Varden, we'll just click on this video that's coming your way now.